Hello, my name is Bautista, and I'm the host of Owning a Piece of America. My colleague here is also a very good friend, Steven Sugarman. Steve has successfully founded several businesses, including a mortgage company, investment advisor, and a bank called Banc of California. I work closely with Steve at Banc of California as he grew the bank to over $10 billion in assets and was received as one of the top banks in America by Forbes magazine. Importantly, Steve's leadership and community engagement enabled the bank to earn an outstanding rating from the Office of the Comptroller of the Currency, OCC. Over the past several months, I have been working with Steve to launch a community development financial institutions, CDFI, that can help provide capital to homeowners and small businesses who are seeking to fund their own dreams. Welcome, Steve.
Thanks for having me, Faith.
Steve, so why do we need CDFI, and why the banks can't just give loans to the underserved community?
Well, one of the things that we've seen over the past several years is that banks no longer are a monopoly when it comes to providing credit. Banks have had a hard time serving a lot of diverse populations. And what the regulators and what organizations like the NAAC and others have learned is that it really takes community engagement, involvement, and to come from the communities to understand how to serve them well for lending in a way that's fair and equitable. And the CDFIs do that. They have governance that's overseen by community leaders. They have programs, and they are there to serve the community. And so the CDFIs are great partners for banks, and they're great partners for the community, and they're there to really help those underserved populations get access to capital that they really need.
So for the viewers, so they can really understand it. So I'm, just to let you guys know, I'm the CEO of a National Asian American Coalition, NAAC, and I'm seeing this all the time, right? After they got their loan modification 5 years ago, now it's recasting, and they've gone to different banks and they cannot qualify. One pastor that I just spoke, you know, they have everything. So can you give a specific example on what our organization, our CDFI, can help them with?
Well, this isn't a small problem. It's an enormous problem. And what we've learned is that consumers are increasingly going to non-banks to meet their credit needs. And the FDIC just completed a study that showed that 20% of homeowners and small business owners now are underserved by banks, that they have to go outside banks to non-bank lenders like CDFIs to meet their credit needs. And it's not because that they're not great credits, it's because the regulatory environment, the banking environment just isn't serving them well. The new economy has demonstrated that non-bank lenders that are popping up everywhere are really those engines that are funding entrepreneurs. They're funding homeowners, and they're taking bigger market share. And those people that we need to serve well are those underserved populations that are underbanked, that banks aren't serving well, those new entrepreneurs and business owners, those people who are first-time home buyers. And community development financial lenders are very well suited and are an appropriate place to make sure that they get served well, they get their capital, and they get in a fair and equitable way.
Yeah, and I mean, as a banker, and I work with banks also, it's not that the banks doesn't want to give the loans, right? I mean, they're being restricted. And when you're talking about the non-bank lenders, are they also regulated?
Yeah, so coming out of this last crisis, there was an enormous problem about how loans were being made to a lot of people, a lot of at-risk populations. And the Consumer Financial Protection Board was developed, and their charge was to make sure there was no predatory lending and that there was fair lending. And banks, non-banks, all lenders come under the oversight of the Consumer Financial Protection Board. The one thing that's really
the CFPB.
The CFPB. One thing that's really important to note is that when the CFPB set up and looked at what happened and how we got ourselves where we got to, during the Great Recession, what they found was that organizations that had community governance and community oversight didn't experience the predatory lending issues and actually had as good of credit experience and served the at-risk populations very well, but they didn't have the predatory issues that some other organizations suffered from. And so there are organizations that are well suited, that the regulators permit to make loans, and that are designed to be able to fit this market need. Those are these CDFIs.
And how many CDFIs are there in serving the Southern California?
Well, there are hundreds of CDFIs in California. The issue is that many of them perform the financing service more as a hobby. The average balance sheet of a non-bank CDFI in California is just over $20 million. It's very hard to provide high quality credit and to really address this $1 trillion market if your capital is about $20 million. Right. What we really need is institutional quality lenders that serve these community development needs. We need large scalable CDFIs that have strong credit, strong data, strong reporting, strong analytics that can serve this market in a high quality way.
So Steve, as a CEO of the bank, why do you want to start a CDFI? I mean, what's your passion? What drives you in doing this?
Well, one, the chance to work with you. I mean, but I've had the chance to work across financial services, from broker dealers to a bank to a mortgage company, and what you see is that there are opportunities to serve consumers who have dreams, and you can take businesses and you can grow them quickly by serving consumers who have a need that the current organization is not well serving. With the lending environment today, whether it's mortgages on homes or loans to small businesses, people agree that there are areas that are just broken, where credit-worthy consumers just can't get the financing they need. That needs to be resolved. And it's not a question of whether it's a bank or a non-bank. It's a question of what's the best way to resolve that in a way that meets the need and that serves the community, and also that can serve your other stakeholders, employees, investors, and community leaders. And a CDFI is one of those ways you can do it. There are many ways to do it, but there's definitely a need, there's an opportunity, and there's something that we can do really good and serve a lot of people, but it will also be very good for the CDFI and for all the stakeholders who are part of it.
So I'm analyzing this, that, after the financial crisis, I mean, the pendulum really went to the extreme. And it's been, 11 years now since financial crisis happened. So do you think should be back to the middle now? And I suggest, or I assume, or what I would like, is the CDFI will be the solution to those people that cannot just get loans. So let's talk about an example, so at least they can really understand.
Sure.
I'd like to buy a home, but it doesn't show on my income tax return that I'm making this much money. But I can't put 30% down. Most of the banks cannot get that loan, and I'm seeing that. So is that something this CDFI can do for this type of buyers?
Look, the number one thing that's important for any lender is strong credit quality. And I think everyone agrees that any borrower who wants a loan needs to have an ability to repay that loan, because you don't want to take advantage of anyone and you don't want to be seen as being predatory. However, there are a lot of borrowers out there that have, for instance, volatile income, that their jobs they switch, or they make a lot of money one month and not another month, or their taxes just don't show the income because of depreciation or other esoteric accounting rules. These borrowers are highly creditworthy. The FDIC's and the Department of Treasury has talked about volatile earnings as a source of frequent pain within the banking industry, where creditworthy borrowers can't get the financing they need. this is an example very similar to what you're giving. CDFIs are a great place for them to get financing. If they can repay their loan over time and they have demonstrated they can collect the capital for a meaningful down payment, more likely than not, these are credit-worthy borrowers. And there needs to be a solution so the credit-worthy people aren't treated as statistics, but they're treated as people. As you go back historically, credit underwriting used to be about understanding the person in totality, understanding their character, understanding their economics and their financials, understanding who they were. You wanted to know them as a person. Somehow we got away from knowing them as a person and substituting things like a credit score or a number. And that's fine for a big part of the market, because when you're dealing with hundreds and thousands of loans and you're doing it in an automated fashion, sometimes some businesses you have to do it as statistics. But the CFPB and the regulators, even during the crisis, when they're developing the new rules, had the prescience to understand that you needed to make room for community organizations and community lenders who could still understand the person. And if you look at their rulemaking, they were very thoughtful about this, and they understood that CDFIs, community development financial institutions, played a role that large banks can't play. They could get to know the borrower and do traditional, long-standing, proven credit underwriting, understanding the person. And the example you gave.
So Steve,
yes,
we'll be right back after commercial, but this is really like music to their ears, whoever's watching right now, because they should be looked at as an individual, and this is why this is really community development financial institution. Welcome back to Owning a Piece of America. This is really dear to my heart because I recognize your hardship. I recognize that you want to buy a home, but nobody's giving you a chance to buy a home. You want to start a small business, but nobody's giving you a chance to start a small business. Talking to Steve and this new CDFI, I really believe that this is the solution for all of you. So let's continue talking about why the need of CDFI. How much CDFI, how much loan should be out there? I mean, based from your experience, I mean, you made your bank from 2 billion to over 10 billion, and talk about the needs that you were not serving before and now that you'll be able to serve.
The market for lending on homes and to small businesses is enormous. It's broad, it's deep, and it's high quality, especially right here in California. California is the biggest, most liquid real estate market in the world. So there's really no limit if you have a lending product that's needed. The good news for the CDFI, but the unfortunate news for the community, is that there's a lot of need. The traditional financial institutions are having a hard time serving a lot of at-risk populations and a lot of underserved communities. The FDIC estimates about 27% of the population is having a hard time getting fully served by banks. So what you see is a need to serve that market. So there's no limit on the size of a community development lending organization, as long as you have a product that works and you're doing it in a way that's credit-worthy, where you can build a business that's an actual business serving a need. What I think is important here is to understand this isn't necessarily a competitive threat to the existing providers. This works very well in partnership with banks, where they can't provide this credit directly, so they can partner with CDFIs, and they can provide their capital to CDFIs to grow, and that allows the CDFIs to get much bigger. It's not a threat to the new online lenders, because these CDFIs have governance that comes from the community that's required to make these types of loans. So this is a hole in the market that CDFIs are uniquely well suited to fill. They can form great partnerships with existing financial partners to build their capital, and by serving these underserved communities, they can get good credit, good economics and really be large and create a huge impact throughout the state.
So would you say that for the non-bank lenders, there's still some, unfortunately, some unscrupulous brokers there? I think they're coming back again. Would you say that a consumer will be more served, and because we're still regulated somehow, to go to a CDFI for their lending needs?
Yeah, I mean, the world of borrowing and lending is very complex, and there are a lot of risks. One of the best protections a borrower has is knowing who they're dealing with and knowing that the organization that they're borrowing from is doing right by the community. A CDFI and the CDFI that you would want to build, borrowers would know that it's looking to do right by the community. It would have governance and oversight by community leaders that reflect the community. Not a lot of organizations can say that. It would have a mission that has a primary purpose of community development. It would have the governance in place to make sure that predatory practices and fair lending issues don't arise. Other types of organizations and unregulated lenders don't have those protections. That doesn't mean they're necessarily bad, but it just means that a borrower needs to understand who they're borrowing from, because you don't want to, you want to make sure that if you do have volatile income, or if you do have a loan from someone, that they'll continue to treat you as a person, not just when they make you the loan, but after they make you the loan. People have life experiences. A lender should look at the life experience and make sure the loan's suitable and that they can work with borrowers during the life of the loan and treat people as people and treat people fairly. And that's what a CDFI is there to do.
But unfortunately right now, really, no one is doing that, right? I mean, no agencies are, I mean, it's not that they don't want to do it, but because of the regulatory burden, they cannot do it.
It's hard for underserved populations to find the right advisors and to find the right way to enter the traditional financial system. It's hard. The connections aren't there that should be there. Finding a trusted relationship and finding it through a CDFI is a fantastic way to solve that issue.
And I also know that if they're being turned down, it's not the end of the world, because we will going to educate them. We will be using a different, and we'll talk about this after the break also, about, you know, the credit scoring. I mean, all those variables that people cannot get a loan. You will be partnering with a lot of HUD-approved counseling agencies, a lot of pastors, correct?
Well, it's been demonstrated that by providing consumer credit counseling, you can improve the knowledge of borrowers and the borrower experience. And you really want to do that. That's the right thing to do. And you want to incorporate credit counseling and financial literacy into these programs. And we definitely want, and borrowers should want, to work with lenders who are looking out to make sure that the borrower is as knowledgeable as possible, right, and that the lender's being as transparent as possible, not looking for borrowers to be less knowledgeable.
Yeah, you know, we have CFPB, the Consumer Financial Protection Bureau Agency, so we'll talk more about how we really protect it. Welcome back to Owning a Piece of America. We're so glad again to have Steve Sugarman here as our guest. Steve, let's talk about CRA, Community Reinvestment Act. Most of our viewers do not know what that is, and probably they don't even understand what CRA means. Let's talk a little bit about that, and how do we tie the CRA in our CDFI program?
Sure. Well, the Community Reinvestment Act was a regulatory act and policy that banks are under, which obligates them to do certain activities, lending, volunteer work, investments that benefit the communities they serve. It's basically regulatory guidance and review that the banks are doing good for the communities they serve. Now that might sound a little bit weird, that a business would have to be reviewed for doing the right thing. But the bottom line is that's a little bit about what CRA does. And as a banker and the CEO of a bank, the CRA plays a really important role and a strategic role in how you plan to position your bank and how you plan to run your bank. There are those organizations who don't have much need to worry about CRA requirements because they look at their bank as a steward of the community, and they believe that by doing good for the community, it's good for the bank and it's good for the bank shareholders. And the CRA is actually profitable. And the building community relationships benefits all aspects of their business, from deposit gathering to recruiting to doing good loans. And so they invest heavily in CRA and they build a strong brand, and they're really well known for being a strong community leader in terms of corporate responsibility. There are other banks who may take an approach that see it as a regulatory burden or a tax and believe that it's just a financial penalty that they have to spend money on, and that their business plan doesn't include community activities at the level that the regulators would like. So that's CRA in background.
And I understand you were an outstanding CRA CEO.
Well, what I believe, and I believe firmly, is that CRA and community development, especially today, is the #1 investment most banks can make as far as return for shareholders. That might not be commonly appreciated, but it's true. When you do right by the community, you don't need to spend as much money on advertising and promotional materials telling people why people should like you, because they know that you're doing the right thing because you're there at the community events and you're financing people. When you do right by the community, you don't need to spend as much on recruiters to attract high quality talent, because talented bankers want to work somewhere that they can be proud. You don't need to spend as much money recruiting depositors. So we led on CRA as a strategic decision because we thought it wasn't just great for the community, but it was great for our shareholders. We thought the CRA was profitable and good.
Right.
CDFIs and community development financial institutions are a great opportunity for banks who want to do the right things in the community and strive to make loans to homeowners who are having trouble accessing banking organizations and small businesses that are having trouble accessing banks, but that don't themselves at the bank level have the capabilities or aren't in the businesses of making those types of loans. So a number of banks don't make mortgages.
Right.
A number of banks don't make small loans to small businesses. But if they aspire to do the right thing in the community and they aspire to be integrated into the community and to work with community leaders, CDFIs provide an awesome platform to partner with community leaders, to provide your capital to the CDFI to deploy to homeowners, to make mortgages, to fund dreams. And so banks should really be celebrating the possibility of CDFI partnerships, because it gives bankers of goodwill and who aspire to do the right thing an ability to do it without needing to build all new businesses and change the businesses they're in.
So, Steve, thank you so much for being our guest today. So, if I can summarize what Steve was telling everyone, CDFI is an alternative way of banking, of getting your mortgage, of getting your small business. I hear this all the time. Everyone is having a hard time getting a loan, even though they're qualified. It's a CDFI that's a solution that's been given by the U.S. Treasury to be the agency to help people like you. NAAC, National Asian American Coalition, is a certified CDFI. You can call our office, 858-537-1700, and go to our website, or 650-892-8469, and really learn more about this. The idea of this is we are going down with the community. We welcome all the nonprofit organizations to partner with NAAC. We welcome all the faith-based organizations, especially the pastors. You're still the trusted person out there. As much as I love bankers, we're still the one that's being trusted. So I welcome everyone. Let's do this together. Regardless what the environment right now from our government with the current administration, it's still us that will make a difference. It's still you that will make everything change. So by partnering together, by working with CDFI, like the NAAC, we can make a difference. We can create jobs. So thank you so much for watching Owning a Piece of America. My name is Faith Bautista.